There will be a question and answer session. Kindly note that only those members who have previously registered as a speaker will be allowed to speak and raise the questions, as intimated in the notice. For this purpose, I will announce the name of such a member, and that member will be unmuted by moderator to allow him or her to speak. Speaker may choose to participate either by audio mode or by audio-video mode. Members who have not previously registered as a speaker are not permitted to speak or raise any question. In that case, they resist to ask the question. The same may be sent to the mail to the company secretary after the meeting, and they will be replied with a reasonable time. I will now brief you on the important matter relating to voting on the resolution. Members who have not cast their vote through remote voting facility and who are attending this meeting may cast their vote by electronic means on all or any resolutions. The members who have already casted their votes by remote voting shall be entitled to vote again. Members may follow the process for e-voting as provided in the notice of annual general meeting. Members may cast their vote at any time during the course of meeting and until 15 minutes after the close of the meeting. The scrutinizer will scrutinize the vote cast at the meeting, and through remote voting, voting result on resolution will be announced on receipt of the consolidated report on or before 10th August 2022. Further, today at this meeting, requisite quorum is present. Now I hand over the meeting to Puneet Lalwai, Chairman of this annual general meeting. Over to you, sir.
Thank you. Since valid quorum is present, I now call the meeting to order with a warm welcome to all members present, my fellow directors, the auditors, and company officials present. For the sake of good order, I confirm that I have satisfied myself that all efforts feasible under the circumstances have been made by the company to enable the members to participate and vote on the items being considered at this meeting. With the permission of members, I take notice convening this annual general meeting as read. All items of special business are explained in detail in the explanatory statement attached to the notice of the meeting. The annual report for financial year 2021-22 has been emailed to all shareholders whose email IDs were registered with the company. For those shareholders whose email IDs were not available with the company, the annual report was uploaded on the website of the company and the stock exchanges. The independent auditor's report on the standalone and consolidated financial statements and secretarial audit report, which are circulated as part of the annual report, do not contain any qualification or adverse remark. With your kind permission, I also take these reports as read. Now I'd like to brief you on the company performance for the year 21-22. We closed with a revenue from operations at 288 crore and EBITDA stood at 70 crore. The profit after tax was 61 crore, which was up 16% from last year. And EPS stood at 62.4 on a face value of 10 each. The board has recommended a final dividend of 80%, that is rupees 8 per equity share of rupees 10 each for the year ended 31st March 2022. So this year was an extremely challenging year from an execution standpoint. We had the Delta wave to contend in the first quarter, and then to a smaller extent, we had the Omicron wave in January. And I think the team has done a fantastic job in navigating these difficult circumstances. I also understand, would like to brief everybody that there were a lot of disruptions at the sites of our customers. There was disruption in raw material availability, very inflationary environment. And through all of this also, the team has navigated extremely well. Apart from some extremely complex equipment that we executed, we were also able to book for the coming year an all-time high order book of 400 crores, with which we entered the year on 31st March 2022. So the order book clearly reflects our focus to be building scale in the business, and we have also augmented the capability of the company. On the capex front, we were able to make significant progress at Odhav, and the important milestone was inauguration of the L1 Bay, which should augment revenue at Odhav itself, with a lifting capacity of 150 tons. We also inaugurated a clean room facility, which will allow us to get into exotic metals and very high value processing. Finally, on the KHEDA front, the progress since the second half of the year has been satisfactory after the COVID disruptions, and KHEDA should give us a real boost, which should come on stream sometime during this financial year. And this will set us up for great growth in the future. Lastly, I would like to express my sincere thanks to all the employees, customers, suppliers, investors, lenders, regulatory and government authorities, stock exchanges, depositories for their support during the year, and hope the same would be continued in coming years also. I now place before the meeting the business mentioned in the notice of the annual general meeting to board, and hand over to the company secretary to start the question and answer session.
Thank you, sir. For question and answer session, I will start the name of the member who has registered as a speaker, and thereafter the member will be unmuted by moderator to enable him or to speak. The first speaker is Mr. Shivan Siraya. Request the moderator to unmute Mr. Shivan.
Hello, am I audible?
Yes.
Yes.
Yes, sir. Sir, I have actually mailed my questions to the company. So, do you want me to read them, or because I have nothing other than those 5 questions that I have sent?
So you had questions around execution challenges. You had question around heat exchanger technologies over the years. Are those the 5 questions?
Yes, sir. Yes, sir. Those are my 5 questions. Yes.
Fair enough. So I'll answer all the questions once all the speaker shareholders have spoken. I've noted your questions and I will provide the answer.
Sure, sir. Sure. Thank you.
The second speaker is Mr. Kaushik Savkar. Request the moderator to unmute Mr. Savkar.
Good morning, everyone. I hope I'm audible.
Yes.
Thank you, sir. First off, I would like to thank the Board of Directors for giving me an opportunity to speak in this forum. Many of you would remember me from the conversation of past years, so I will keep both my ask and introduction brief. I hope I'm clearly audible, sir.
Yes.
Thank you, sir. Myself, Kaushik Savkar, a qualified and practicing chartered accountant from Mumbai. I have been suffering from dystonia, which has rendered 55% of my body paralyzed, impacting my right hand, my right leg, and a speech. While I have not let that come in my way of becoming a chartered accountant and practicing, I do request your support in helping me continue to be self-reliant. I was optimistic after a conversation we had last year about me working for our organization on certification work, including Form 15CB. However, nothing has progressed since. While I understand things may have not progressed due to pandemic situation last year, I do hope that after our conversation today, our organization will start engaging me in this area as soon as possible. Once again, thank you for the opportunity to speak today. and I hope to see a positive movement forward with my ask. I support all the resolution. Also request to please provide reply from ask. Thanks once more. Thank you.
Thank you.
Okay. The third speaker is Mr. Dinesh Koteja. Request the moderator to unmute Mr. Koteja.
Can you hear me?
Yes, sir.
Yeah, I am Dinesh Koteja from Bombay. Sir, good morning to all of you. Chintan bhai, good morning. Sir, I have got only one particular observation, that in the last quarter we made a turnover of nearly 100 crores, 99.98 crores, and we have earned a profit of nearly 26.58% net profit. Now, I was just trying to understand, you have got orders on hand of 400 crores. So if I just do simple multiplication, we will be reaching turnover of 400 crores with a margin of 100 crores and EPS of 101 crores. So, I mean, can you just, give me some idea whether I'm right or wrong in my calculation? Sir, our promoters quota is only 43.04%. I mean, can't we raise it further by making a buyback so that, we will get our good money and you can raise your stake? Sir, your profit and loss and balance sheet must be on the same page 65, 66. This is opposite page. It should be on the same page opposite each other. Sir, page 68, particularly I want to mention that page 68. We have got, I'm just taking it out. Just give me 1 second. Yeah. Page 66, sorry. We have made excess provision for earlier years to the extent of 15 crores. And thereby our net profit is increasing more than the profit before tax. I mean, why there is no check and control system for this taxation work, We are writing back, we are providing excess, we are providing less. Now, this should not happen in a big corporate, sir. We should be very precise in our calculation. 5%, 10% we can understand, but 15 crores is a big amount for, excess provision made. Sir, our cash flow statement shows that we have spent nearly 61.56 crores in the last 2 years for capex. Now, what type of capex we have done? What is the payback period? What is the ROI? And what is the incremental revenue you can expect from the incremental capex that we have done? Sir, make a SWOT analysis of the business 4-5 years for the 4-5 years next, giving 2-3 points under each heading. Sir, any vertical or horizontal takeover expansion plan is in place. Thank you very much and wish you all the best.
Thank you.
Okay. The fourth speaker is Mr. Saurabh Jain. Request the moderator to unmute Mr. Jain.
Yeah, good morning, sir. I had just few questions to understand the company better. So, first question is on the heat exchanger market size in India. If you can talk about what is it currently, how is it growing, and what is our market share? And if you can also talk about our ranking currently and any aspirational ranking we are targeting over the next 3 to 5 years. Second question is what we understand is this Hell exchanger and Anveshan heat exchanger are very specialized products. So if you can talk about how many players in India have this technology to do that, and if we are the sole one, so how big is the market? Is the market growing fast? Can these products individually contribute like 100, 200 crore over next couple of years for us? If you can talk about the same. Third question is on the heat exchanger for the green hydrogen. So our renewable book has grown, but it hasn't grown as per the guidance given by some of our customers. They have talked about big plans in green hydrogen, and I think we are supplier to them. So if you can talk about, do we see scaling happening in this division this year or next year? Final two questions on the capex that we are done and we are doing. On the other part, have we ramped up fully? Are we utilizing it fully, the new capex which we have done? And what kind of additional revenue we can get from that capex and by when? Similarly, for KEDA, we have the timelines for January 2023, the phase 1. Is there any shift in timelines, or do we think we can do it before that? And also, what kind of full utilization, how long it will take to full utilize it, and the peak revenue? That is it from my side. Thank you.
Thank you.
Okay. Fifth speaker is Mr. Saket Kapoor. Request the moderator to unmute Mr. Kapoor.
Namaskar, sir.
Namaskar.
Sir, thank you for this opportunity. Sir, firstly, as in your opening remark, you have mentioned about the headwinds the company has faced because of the ongoing pandemic. So, for this year and the year onwards, how are we looking at the growth for the company and also for the sector? Since the order booking is at the opening order book as on 31st March is at an all-time high of closer to 400 crores. And sir, also the update as the earlier speaker has mentioned about the Kheda facility, what kind of incremental business will be generated once that is streamlined? And this we have mentioned about this L1 bay in our by our chief executive officer also, the new L1 bay with lifting capacity of 150 ton. Just a second, sir. Ajay ji, please send me at the last speaker. I will join in for this. Ajay ji, can I meet with the last speaker, sir? Give me an opportunity at the last.
Cannot hear you. Your voice has become very
I will
feeble.
join after some moments, sir. Yeah. Yes, sir. Sorry, sir. I got one another call. Sorry, sir. Can I continue, Mr. Chairman?
Yes, please.
Sorry for the interruption, sir, on my part, sir. So I was looking at this L1 bay understanding also, sir. If you could give us some understanding, what does it imply for us, the new L1 bay with lifting capacity of 150 ton? How what kind of game changing would this add to our current working? The ability to have a better understanding. Were we outsourcing this earlier, and now with this 150 ton L1 bay coming into place, what difference will it make to our facility? That was my I'm trying to make sense of the same. Sir, earlier when we had our March quarter numbers, we did spoke about margins compression. Wherein because of the increase in the raw material prices and having the nature of our order in which we are unable to pass on the effect of higher raw material onto our buyers, since it's a fixed contract as per my understanding. So with the easing or the stabilization of the raw material prices, अभी हम कैसा देख रहे हैं हमारे margins को किस trajectory में देख रहे हैं, because historically they used to be in the higher 20s, and I think so Roop sir Mr. Rishi Roop has commented last time that कि वो second quarter के बाद ही या first quarter के end के बाद ही बता पाएंगे कि अभी क्या trajectory अपनी बन रही है. तो सर उस पे अगर आप कुछ light throw करें बेटर रहेगा. वैल्यू एडिशन के क्षेत्र में सर क्या एस्पेक्ट हमारे क्लियर हो रहे हैं गोइंग अहेड, कैसा देख रहे हैं? एंड इस ईयर की जो ऑर्डर बुक है 400 की, हम अपनी एग्जीक्यूशन कैपेबिलिटी कैसी बना चुके हैं? मैंने व्हाट इज आवर करंट एग्जीक्यूशन कैपेबिलिटी, हाउ मच ऑफ दिस ऑर्डर इज इट फिजिबल फॉर अस एज पर आवर क्लाइंट रिसीवेबल शेड्यूल्स, जिसमें हम एग्जीक्यूट कर सकते हैं ओवर द ईयर? And also on the receivable part, if you could say the receivable days, I think so उसमें कुछ elongation हुआ था, तो वो आप कैसे देखते हैं सर? ओवरऑल में सर सेंटिमेंट, बिजनेस सेंटिमेंट, ग्रोथ, इस पर ही सर अगर आप कुछ और एस्पेक्ट थ्रो करेंगे तो that will suffice, and we will have our conference call tomorrow, so would be joining and speaking post our Q1 numbers are in public domain. And thank you and all the best to the team, sir.
Thank you.
For the yes. Thank you. Namaskar, sir.
Namaskar.
The next speaker is Mr. Hitesh Satish Chandra Doshi. Request the moderator to unmute Mr. Doshi.
Hello. Am I audible?
Good morning.
Good morning.
Yes.
Good morning, sir. Good morning. Sir, firstly, thank you so much for sending us the annual report on time, and it was very informative, and most of the information is available. So just a few questions to just broadly understand more about the business and the opportunity that is lying ahead of us. So, sir, my first question is, the process equipment like column and reactor were also planned to be added in our product portfolio. So when can we expect these to start the commercial production, and what could be the market size and opportunity for us? And if you can tell us who all are our top 3 customers in terms of revenue and their respective share in the total revenue, that will also help us understand our diversification. And sir, our refinery and petrochem combined is close to 60 and 90% of our order book as of now. And as we can see, from a longer term perspective, the world is moving from fossils to renewables. At the same time, in the shorter term, we are seeing there are shortages in capacities, and that is why oil prices were where they are today. So what is your view on business coming from refinery and petrochem sector in the short term and long term? Because it is a sizable opportunity, and in terms of order book also, it is a sizable order book as of now. And sir, one bookkeeping question: there are some licenses with a carrying value of 20 crore, which is lying in our assets. If you can just tell us what all it pertains to, these licenses. And as we can see, sir, our export revenue has also declined from 86 crore last year to 28 crore this year. So what could be the reasons for decline, such a drastic decline in our export revenue? And if you can tell us the outlook for the same. And lastly, sir, how much of our revenue comes from government and PSU companies? And is there any tender that we participate, or is there any special kind of arrangement that we have for those kind of orders? These are broadly my questions. And some other questions were already asked by our earlier participants, so I am not repeating those questions. And I support all the resolutions and wish you all the very best, sir, for the future endeavors.
Thank you.
Thank you so much. Thank
you very much.
Next speaker is Mr. Ravi Kumar Naredi. Request the moderator to unmute Mr. Ravi Kumar.
Hi, good morning to all. Am I audible?
Yes, good morning. You are audible.
Sir, I have few questions. First, we were having 400 crore order book as on 31st March 2022. What is order book at current time, and will that order book complete in FY23? Second question, how much capex we did in FY22 and what is planned in FY23? And third question, if we do 1 rupees capex, how much volume or top line we get? And fourth question, FY25-26 1,000 crore revenue target is intact or not? And will you remain debt free for how many years? And sir, last one, 21.52% net profit margin retained in current year, and now commodity prices are soft. So will you get to benefit? Thank you so much, sir.
Okay.
Thank you.
Then, next speaker is Mr. Gautam Nandi. Request the moderator to unmute Mr. Nandi.
Am I audible, sir?
Yes,
Sir,
yes, you are audible.
Good morning and namaskar. Respected
Good
Chairman.
morning.
Yes, respected Chairman, Board of Directors, and my online fellow shareholders. Myself, Gautam Nandi of Kolkata, the city of joy, an equity shareholder of the company. Firstly, I like to give thanks to your secretarial department for sending me annual report and other necessary relevant papers through email well in advance, and good connection for VC well in manner. So specially thanks to our respected company new secretary, Mr. Chintan Kumar Patel, and his whole team for rendering good services to our minority shareholders. Sir, you are organizing your annual general meeting through video conference, and I find it is a grand success as before. So thanks again, sir. Sir, a few years back, we had faced GST and demonetization, and now COVID-19. Each and every company is suffering very much. But I am very glad to see that despite a tough pandemic and most challenging year, your performance is very good, is excellent. you are giving dividend also to our minority shareholders. Sir, your annual report is very attractive and also very informative. So thanks again, sir. Sir, in this context, I like to suggest, please issue hard copy of annual report to the speaker's shareholder list, and also mention the speaker's serial number, speaker's shareholder's serial number in your link, though you have provided. Please maintain this. Thank you, sir. Your CSR activity is very good. I must appreciate it. Sir, what is your roadmap for the next 3 to 4 years? And one thing, sir, please let me know the booster dose has been given to your each and every employees or not. If not, please arrange for the same immediately, because the employees are the pillars of our company, sir. Sir, I am very pleased to be a shareholder, and I am also very proud to be a shareholder of your company. I am very hopeful towards the prospect of our company, sir. I have full trust with our strong management, sir, like you. And so I wholeheartedly support your all resolutions, which I have already casted through my e-voting. Not only me, along with my family, in favor of you, sir. Sir, I am very happy with your company. Sir, nothing to say more today. Looking forward with a positive outlook towards our company with higher profit margin, handsome dividend, 1:1 bonus and a return. And lastly, one thing, sir, please do something for our minority shareholders, at least for the speaker's shareholders. Sir, this is nothing but a token of appreciation or token of love, whatever you say. So please consider, sir. Thank you. Thank you, sir. Signing off, Gautam Nandi. Thank you very much.
Thank you. Thank you very much. That concludes the speaker shareholders. Can I get into answering the questions?
Yes, sir.
So I think the first speaker shareholder, Mr. Shivan Sarvaiya, had sent a list of questions. So the first question was, as Anup Engineering has over the past few years faced tremendous execution challenges due to COVID and delays in capex causing internal bottlenecks, can we assume that these challenges are behind us? Obviously, as the pandemic has receded, this year we don't expect, unless new waves of COVID are going to come, we don't expect these kind of disruptions. However, of course, the world is extremely uncertain. Raw material prices are fluctuating, and I think in general the world is in an uncertain period. So those kind of challenges are, of course, always going to be there. But rest assured that the company is capable of tackling these challenges. On the capex, we have progressed very well on the order capex, and KEDA is, since the last 6 months, has been progressing satisfactorily as well. So going forward, we will be creating extra capacity. The annual report mentions changing heat exchanger technologies over the years. My question is, what has Anup done or is doing to keep pace with the same? Do we possess the latest technologies amongst competition? Yes, we have helix and embaffle technologies. Another speaker shareholder mentioned those briefly. And later on, I will ask Rishi to talk about heat exchangers in general. But these two technologies put us in a very elite group. Very few, maybe 2 or 3 manufacturers in our entire region have access to some of these process capabilities. And so, in a sense, the competitive landscape there is much better compared to the run-of-the-mill heat exchangers. And that is also driving a lot of orders. So we can clearly see the benefits of having these technologies. Do plate heat exchangers pose a threat of substitution to shell and tube heat exchangers? Plate heat exchangers are totally different segment and market to shell and tube heat exchangers. So no, they do not pose a threat. Can you give a broad idea on the total opportunity size of the products we manufacture? So the good news is that this is a very large market globally. So it's, capital goods is about, process equipment market is about $100 billion US. And we are catering to a small niche within that 100 billion. Our specialty is, of course, heat exchangers and also some other types of process equipment like columns, absorbers, other kinds of pressure vessels. And even for us, we are starting with a very small base. So for the foreseeable future, growth doesn't seem to be a challenge from a market perspective. We will, of course, have to execute and capture market share. We have, of course, robust plans to do. So the market is not at all limited. Then there were questions around profitability. Mr. Kotecha asked that last quarter was 100 crores. So can we expect 100 crores every quarter and with a certain profit margin? See, one has to understand that the process equipment manufacturing cycle is a long cycle. So, what actually gets delivered in Q4 the start date of that manufacturing is 6 to 8 months prior to that. So the sort of very even, sort of manufacturing flow is not there in our industry. Each order is a project of different timelines. So that straight calculation doesn't work. But we should have this year significantly higher growth than last year. Closer to that 400 crore mark, hopefully, if our execution goes well and the pandemic situation remains the way it is. 26% profitability. This year, as we had mentioned in the last post the last board meeting, there are significant challenges on margins because of very fast fluctuation of key raw materials. And the prices this year moved up so far that, no matter how fast one can react, the time between order taking and order closing and order acceptance, there was so much movement that it was impossible to sort of hedge our raw material position. So there is likely to be an impact on margins. But I'm also happy to say that this impact will be temporary in nature. Already as we are taking newer orders, we are coming back to the old margins. So shareholders should expect lower margins this year, but be confident that it is a temporary blip, and all new orders which will come towards which will get delivered towards the latter part of this year and into the next financial year are back to our market leading healthy margins. What is the capex we have done? I will ask Rishi to speak about capex and what incremental revenue we can have at all the locations. So that's one thing Rishi will answer. I will also request him to talk about heat exchangers. There were specific questions around heat exchangers and how much are Helix and Enbaffle technologies helping us. What is the forward-looking market, particularly on heat exchangers? And there was also a question on hydrogen. That's been in the news. What is happening at our end around hydrogen? Is it a big opportunity or not? I think Mr. Kapoor also asked about growth compared to last year. So this year we should have, as I mentioned, significant growth, jump in growth. we are aiming to come close to that 400 crore mark. Incremental turnover from CapEx, another question which Rishi will answer. L1 Bay also, they would like to know what L1 Bay will contribute to us. Margin compression I have already spoke about. And then there were questions around non-heat exchanger products, column and centrifuge, etc. Sir, we are already doing these products. We do a large proportion of heat exchangers because, we are experts at heat exchangers and we want to do a large proportion of heat exchangers. We are picking and choosing these orders based on our capacities. And we have the capability of doing all these other equipment, and we will continuously evaluate what is the best product mix to put around under the crane so that we maximize the profit. Rishi, also a question around top customers, if you can handle that as well. And then there is a question around 90% of revenue coming from refinery products. It is true that we are highly indexed on refinery. In the near term, we don't see refinery going away anywhere. In fact, a lot of projects in oil and gas are coming that should see us continuously getting good orders from this segment. Meanwhile, we are also diversifying into chemicals, fertilizer, water, and various other kinds of specialty chemical processes. So that we've won quite a few good orders that are non-refinery. And with the addition of clean room, we should also get exotic metal orders from other segments. So that whole process of sort of diversifying out of refinery is on, and we are confident that should refineries sometime in the medium to long term start to sort of slow down, we will have enough opportunity to get into many other segments. There was a question around export revenue. Export revenue this year is lower. That's purely a result of the sort of opportunities that came our way. We filled up our capacity with attractive opportunities in domestic. So as you know, our customers are projects that are coming up. So it depends on where the interesting projects are. Sometimes it will be in India, sometimes it will be overseas. But particularly now, as our capacity is expanding, we will be focusing a lot more on export orders. So far, we've been able to fill our capacities with good projects in domestic this year. So the export proportion is low, but in the future, we expect that export proportion will go higher. There was a question around government tenders. We do participate in government tenders. Generally, it is a process of putting in a bid, and then there is usually a reverse auction with the qualified set of bidders. And you'll be happy to note that we've been faring quite well. And in our starting order book of 400 crore, we've won. Several of them have been won through transparent reverse auction process. Then there was a question around commodity cycles. Yes, the commodity cycle is softening at present. However, as I mentioned earlier, there is the order cycle is anywhere between 6 to 9 months. So the softening of commodity cycle now is likely to benefit us 6 to 9 months down the line. There were requests for hard copy, etc., which we will try to comply with. The roadmap for 3 to 4 years, there was a question. We will be growing at upwards of 25% for the next 3 to 4 years, with healthy 20% plus EBITDA margins that you have been used to in the years previous. So I will stop my answers here. I will ask Rishi to take some questions, to answer some questions around the market size, especially for heat exchangers, around the capex is done, and around the overall landscape on the market. Over to you, Rishi.
Thank you, Chairman sir. And well, to answer the question regarding the market size which is available for the process equipment, I think the overall process equipment, you could say that it is a global potential is to the extent of about in excess of about $150 billion US. This can be typically divided between static and non-static process equipment equally. And static process equipment is where we play, and so that's the potential is in the range of about $75 billion US. This includes various kinds of process equipment, as the chairman pointed out. We are talking about heat exchangers, shell and tube, reactors, pressure vessels, columns. So all these categories, they form this, the overall global potential of 75 to 100 billion US dollars. Looking at the shell and tube heat exchangers market alone, we are talking about something which is in the region of about 15 billion US dollars as of now, and slated to grow to about 26 billion US dollars in the next 5 years. So that's the kind of growth that we are expecting in the heat exchangers, and we happen to be a major player in the heat exchangers market. When it comes to the global size, we are talking about all sectors. The market size is taking into considerations not just refineries and petrochemicals, but also chemicals, fertilizers, power sector, water sector, and heat exchanger being what it is one of the most versatile process equipment which is finding application in cutting across sectors. So I think that's one question that we can address. The next part about the kind of highly advanced technologies which are coming into this to increase the efficiencies and the to make the exchangers more in tune with the growing service requirements. As the technology creeps up, the requirements for these exchangers has also grown, and there are emerging technologies. And we are happy to share with you that we are present in the leading technologies which are accepted, in the process industry. Foremost being, of course, the helical. Then we are also having tie-ups and collaborations for being the sole licensee for the MBAFL technology. That's the second one. And the quest to include more technologically advanced products, not just in shell and tube heat exchangers, but also in other process equipment continues for us. That's something which is very, very high on our agenda. To give you an idea about the kind of contribution these technologies are making to our order book is that, almost 75% of all heat exchangers that we are doing right now, they are contributed by these advanced technologies. So I think this is the extent to which we are, and it also speaks about the kind of competitive edge and advantage that we hold when it comes to these particular technologies, and that is something that will hold us in good stead in the coming years. About the capex per se, so the whole capex for the existing facility at Udhav as well as at Kheda, I think we need to keep into consideration that the plant was at Udhav was founded sometime in 1962. And it has grown and it has evolved over the years, especially so in the last 10 years. I think totally we would have incurred in ODHAV something in the region of about 40 crores over the past 3 or 4 years, whether it is talking about machines or new bays. We have strengthened the bays which were existing. We changed the layouts. We raised down some of the old bays, and we have built new bays which are going to be more productive. So by doing all that, I think what we have done is that this capex that we have made to the extent of maybe about 50 crores over the last 3 to 4 years has increased the revenue potential from this side to almost 500 crores, which used to be earlier something in the region of about 350 is gone up to about 500 crores is what we are looking at from the existing plant in ODHAV. Kheda, of course, the total investment is going to be in the range of about 200 crores, and we have already incurred about 25 crores apart from the land securing, which we did I think a couple of years back. In the coming year, in the current year, we will be incurring almost about 115 crores more at Kheda. And Kheda by itself, as we take this forward and we move into the new, we establish that site. This, of course, is going to be the first phase of Kheda, where we will be commissioning 2 bays in the second half of this current financial year. One bay is actually where the work is going to start. The second bay is going to be where we will have our ancillary units, or you can say pre-assembly work, which is going to be cutting and plate bending, etc. We are also building the auxiliaries, which are going to be commissioned with the first phase. So that is, I think, going to take about 115 crores we will incur in the current financial year. This will add anywhere about 100 crores plus to our top line in the next financial year as we establish it. We need to keep in mind that this being the potential of the bay, as we move forward, we will be starting on a virgin site. Of course, the selection of that location has been very, very important decision for us, and we have made sure that we have a good supply of the kind of skilled workforce that we have the advantage in ODHAV, and we continue to have the same advantage there at Kheda. That's something which is extremely important for us. So going forward, we have talked about the 1,000 crore vision that we have. Yes, it has got impacted by maybe about 2 years or 3 years, but we are still on track because Kheda, the kind of capex that we have planned of about 250 crores in Kheda itself, that is going to take us to around 500 crores in maybe about 3 to 4 years time from now. So FY27 is when we are talking about getting closer to the 800 crores to 1,000 crores mark, putting both these units together. How we are going to how these two facilities are going to be different from each other. The ODHAV facility is going to focus more on heat exchangers, where we are certainly traditionally the market leaders. We will also be doing exotic materials, like the chairman sir mentioned about the clean room facility that allows us to take care of a lot of exotic materials which can be processed here. So all these special kind of equipment, process equipment which are custom built, and the shell heat exchangers going forward will be done from ODHAV. Kheda is going to be, it is going to be high in its capacities and capabilities. All 3 phases put together is going to be like, we are going to have 8 bays, and lifting capacities will be double that of ODHAV. It's going to be a site which is going to be on the highway, so it's going to be more suited for ODC equipment. Oversized equipment, which is where the process, equipment of the categories of the product categories of columns and reactors and pressure vessels come. So that site is going to be more focused on these, categories where ODHAV is a little, less focused on. So I think both facilities are going to complement. And of course, going forward, once Kheda is commissioned fully, it's going to be the driver for the growth over the next 10 years. Talking about the traditional sectors and what we are doing to diversify into newer sectors, petrochemicals and refineries, yes, they have been our traditional sectors, and we are quite well established there. But the good part is that whatever work is, whatever initial work is happening, we are participating in the newer energy segments. For example, Anup Engineering is privileged to be supplying to the world's first blue hydrogen project in California for one of the leading gas players, and we will be supplying not only heat exchangers but also reactors to that project. We are already discussing, because right now green hydrogen and blue hydrogen are the fields where a lot of buzz is there in the industry. A lot of companies are looking to invest in these areas. We are talking about not just green hydrogen, we are talking about green ammonia, we are talking about green, the entire end products which come from a green, energy. And that's where we are finding that our skill sets of being the experts with metals is going to hold us in extremely good stead. And going forward, I think in the years to come, you will see our participation in these new sectors like hydrogen, liquefied natural gases, the FPSO platforms, where a lot of equipment are going to be supplied by us to be installed on the platforms. The power sectors, the coal to gas projects. So all these sectors, you will see us participate. I would like to just reconfirm that the orders which are being now booked, I think we have passed the material escalation cycle, and the orders that we are booking now are coming at the historical margins. And that is something that augurs well for the next year. Of course, as mentioned earlier, we will be having a margin hit in the current financial year. Going forward, before I talk about the business sentiment, we would also like to talk about the export. Export percentage is something which is, traditionally, I would like to share with everyone, is that the customer set that we have, this business is inherently quite global in nature. You have projects which are being done in India currently, but their process licensors are located in the US or in the Western world or in Japan. So that's where the technology is coming for all these projects. The end user is Indian, and the EPC, some of these EPC contractors, they are also primarily established players who come from the developed markets like the US and the Europe. So whatever work we are doing in India is basically allowing us to create references and create track record, which will help us in getting orders on the global projects of all these major EPC players as well as the process licensors. So we work on a first come, first served basis. We have a so we are, we consider India to be a very, very important market for us. In fact, it's a high growth market for us in the coming 4 to 5 years, with so much of work which is already lined up and announced in the public domain. Something like a petrochemical project which is coming up in the eastern part of India. It's a happening project which should be on stream sometime in the next year. So like these, there are several other projects which are there, which will hold us a very good roadmap for us in the next 5 years from the Indian market itself. Having said that, we have not defocused from exports, but I think we are already strengthening the reach. We are reaching out to our customers. We are adding people. We are building teams who will be able to take care, who can completely be focused on the export in international markets. So all these endeavors that we are taking now will definitely, allow us to retain our competitive edge as we enter into newer markets, and that's a different thing. That's a difficult task, but we are confident that based on the kind of, I think we have paced our growth quite well. We have grown from strength to strength. It has not been an overnight story as far as Anup Engineering is concerned. It has been a long journey. It has given us a lot of experience to enter into new markets, to make breakthroughs, to build something which is new, and to become the best at it. So we have done this quite often, and that's what allows us to. That's what gives us the confidence that we will be able to carry this momentum forward. Yes, the COVID issues are hopefully now behind us, and the sites and everybody. Yes, we will be. Of course, the protocols are very much in place. There was a question on vaccination. Yes, it's something which has been very, very high on our agenda, and we are providing vaccination to our employees. We are facilitating the delivery of the vaccinations to administration of the vaccination to the employees, all categories. So that's a high priority area for us, so that we are well prepared for the future. Going forward, all this capex which has come in, the strengthening of our operations team, the kind of product mix that we have developed over the years, the kind of competitive